Hey everybody, it is Monday, September 20th, 2021. Putting this out later in the evening today. Had kind of a busy day, but wanted to talk about the markets, the Evergrande situation with the second largest real estate developer in China. Still a big question mark out there as to if this entity is going to be rescued, bailed out, or if it's going to be allowed to fail. If it is allowed to fail, it could send major contagion throughout the global financial system, and this is going to be Lehman Brothers times 20 times 30. Some people have compared it to that type or that large type of event when we look at the financial crisis that was kicked off in late 2007 here in the United States. Now, up until now, it's been prop and bailout and rescue and endless liquidity for too big to fail institutions. And there's a lot of talking happening out of the Fed, out of the bankers, and I try to look at what they do, not what they say, because what they say doesn't necessarily, usually doesn't actually match what they're doing. For example, on one hand, they say the economy's strong, it's recovering, but yet they can't raise interest rates. They can't allow mortgage rates to increase. They have to have constant rescue programs for the banks. They have to have emergency measures at the banks to allow banks to have no reserve requirement, because we know that lending and people spending and taking on debt and spending more is the key to this, really, which is a fake economy. So big red day and for all indexes in the markets today. Dow Jones over 600-point drop. So yes, the money printers allowed it to drop. It doesn't mean that they're not going to pump it up again tomorrow or in a few days. We'll have to see. They certainly could bring it back up at the click of a mouse. And when they're ready to let the markets fail, markets will fail. Markets will take the biggest crash, the biggest drop we've ever seen in the stock market, even the housing market. Without the support, without the propping, this would be the biggest bubble bursting and the biggest collapse, the biggest deflationary crash that we've ever witnessed. And it actually will make 2008, it'll dwarf what we saw in 2008. Now, could they let it drop and then just pump it back up again to new all-time highs like they did after 2008? Of course. Now, let's talk about the Evergrande situation and what some people, some investors are saying. And this looming default, or what some people are calling a pending default of this property developer, really scared the markets today. And it's very likely that the Fed will use this as an excuse not to taper. Remember, they were talking about, and we know it's just talk, but they were talking about reducing their speed essentially from going 1,000 miles an hour down to 999 miles per hour, which they would call tapering. But really, when it comes to the Fed, they can't do too much, because if they do too much, it's going to mess up the appearance of a recovering economy, and that would ruin their whole narrative. And we'll find out this week what's going to happen with Evergrande. Can they pay their bonds? Will they get bailed out? And as you can see in the video below, they're a major developer with over 1,300 projects in almost 300 cities across mainland China. Now let's take a look at what some analysts are saying about the Evergrande situation. Will they be bailed out? Well, let's take a look at this next item right here. First, bond market expert Ed Yardeni, president of Yardeni Research, told CNBC he thinks it will act to limit any impact on the financial system. And he's talking about the banks. Quote, "The reality is Evergrande is too big to fail, and I think the Chinese government is going to intervene big time. It will be restructured, and in a way that won't harm the economy too much over there and won't affect the global economy or financial markets the way Lehman did." Remember, Lehman was allowed to go under. And ultimately, the too big to fail lending institutions were rescued. But now we're seeing nonstop rescue. The Fed has came out and they pledged never-ending liquidity, whatever it takes. That's not me saying that. That is the words of the Fed. And you don't have to just listen to what they say. Just watch what they did. And it's constant market support and liquidity. Also, there are worries in the markets about the debt ceiling. Again, they're talking about the debt ceiling not being increased. I don't see that happening. If it does happen, then get ready for major drops in the markets, and you're going to see tons of job losses if the debt ceiling is not increased. Again, I'm not saying it's not going to be increased. I think it's going to be increased, but you know that never-ending increases in the debt ceiling and never-ending spending is the key to keeping this illusion of economy alive. And even right now, we're seeing 300,000 plus new jobless filings every week. If something like the debt ceiling not being increased were to actually happen, you'd go above 1 million per week and probably even beyond that. Maybe multi-millions of jobs lost in a matter of weeks. That's how key increasing debt is, keeping this whole system propped up. All right, now let's shift gears a little bit here. This has to do with the labor shortage, and I've been getting a few messages giving me some of these numbers for how many people we're losing here in the United States because of the illness. And of course, it's part of it. One, people are scared to go to work, and that's a big part of the labor shortage, in my opinion. It's also a lot of other factors too, with childcare, people just getting discouraged because of the rising cost of living, companies not paying enough, lack of daycare and help for all the kids that are homeschooling right now. But the illness and the sickness is a big part of it. When you have this many people getting ill, passing away, unfortunately, that's going to take a big chunk, or it's going to be a big hit to the labor force. And I try not to talk about this too much because people already say that this channel is it's not good news, it's depressing, it's doom and gloom, blah, blah, blah. But here is just a number and a statistic really to look at. This illness is officially America's deadliest pandemic since the U.S. fatalities passed the 1918 flu estimates. And we're talking about right now 675,000 people have passed away from this. So are you here for good news and happy news, or are you here for the truth? That's what's happening, and we have to acknowledge it. It's taking a big chunk out of the labor force. So next time you're at a facility, next time you're at a restaurant or business and you're not getting your order very quickly, the next time you see the small business close down, you have to acknowledge, that this is part of it. Businesses cannot find workers. And we talked a couple episodes ago about some restaurants that closed down because they just simply couldn't find enough staff. And the way things are looking, it's going to get worse. We haven't even gotten into the fall and winter months yet, typically the worst months for sickness and illness. And looks like a dark winter could be coming up, and who knows what else is going to fall on top of this. Will we see other economic situations come up besides inflation? Well, we know inflation's constantly on the rise, and we see car prices went up again. We're going to touch on that in our next video update. Not much is being done, folks, to reverse this. So either way, it's going to get nasty. Inflation, market collapse, deflation, nobody really knows. I saw an interview with Jim Rogers, somebody that's, I believe, over 80 years old now. He's been analyzing the market for years. He retired in his 30s because he's so successful as an investor. And even he doesn't know when this is going to end, if it'll end, or how it's going to end. All right, so nobody knows. If you know, maybe you know, let us know down in the comments so we can prepare even better. But hope you like this news and update today. And thank you for watching. Stay well. Keep stacking. Stay prepared. Bye for now. Peace.